So China posted a lower than expected GDP today. For those of you who have been listening to the Wall Street for Main Street YouTube channel for more than a couple months, you're well aware that this was to be expected, that this was not a surprise, or at least it shouldn't have been. And all the market data, almost all the market data, whether it's the U.S. stock market, the oil price, the U.S. dollar gold price, a lot of it is down today based on the lower than expected Chinese data. But and the VIX is up, I think, a little over 3%. But like I said, we were warned, I've been covering this, we were warned a month ago, almost exactly a month ago, when China's premier, Li Keqiang, warned on September 16th, he gave a speech, September 15th, and he was talking about that it would be very difficult for China's economy to grow at 6% or faster going forward. Basically to prepare people that those GDP numbers, and I don't trust the GDP numbers, not that I trust any country's GDP numbers, but I think China's GDP numbers are even more manufactured. Speaking to my hedge fund contacts who get paid a lot of money to monitor this data many hours a day, Monday through Friday, looking at the export data, looking at the global macro data, and they tell me that the data from China does not match the export data from South Korea, Germany, Japan, Taiwan, etc. So more games, more tricks from the Chinese, but they are preparing us. Listeners to the Wall Street for Main Street YouTube channel for months are well aware that this was to be expected. People who didn't listen to my channel or are new to the channel or people who are China apologists, good luck. I do my research. I read a bunch of different articles, cite a bunch of different sources for you guys, and I've generated a contacts list with really good information from China. So the expectation, the analysts polled by Reuters had expected China's third quarter GDP to grow at 6.1%. The third quarter GDP growth for this past quarter, Q3 of 2019, was the slowest since the first quarter of 1992, according to Reuters. That's more than 27 years. And here's a quote from this Reuters article, quote, "Given exports are unlikely to stage a comeback and a possible slowdown in the property sector continuing, the downward pressure on China's economy is likely to continue, with fourth quarter economic growth expected to slip to 5.9%. Hwabao Trust economist Nie Wen said." And this is another quote from this Reuters article today. "The miss of GDP growth rate in the third quarter is not that big." I would agree it's not that big, but in the reality of China's economy is much different than the headline numbers that are missing expectations, as China's economy remains in a downward trend, which could prompt the central government to roll out more stimulative measures to underpin the economy, Zhang Gang, analyst with Central Securities, said. So there's a lot of problems in the Chinese economy. This is affecting the global macro economy. This is also starting to affect the U.S. stock market now, as evidenced by the tape today. And there's other problems, other articles that are coming out recently about China. And then I'm going to tie it in with the gold price in Yuan and also cryptocurrencies, because I think there's a game. My thesis is that China is well aware, that a lot of Chinese citizens, including people in the Chinese military higher-ups and including government officials, want to get their currency, their savings, their wealth out of China. And it is very difficult. It is becoming very, very difficult to get their wealth out of China. So Zero Hedge just ran a story, and they cited a Wall Street Journal article that was out on October 14th by Nathaniel Taplin called "The Backdoor Capital Outflows Should Worry Beijing." It's behind a paywall in the Wall Street Journal if you want to read that article. But I'll just talk about the Zero Hedge article that came out a few days ago on October 15th. So, panic behind the scenes, China's capital outflows are soaring. And my top source in mainland China, or one of my top sources, he has said that he's being contacted by government employees when the Chinese devaluation was getting really bad against the dollar. The Chinese currency devaluation, when it had blown past 7, there was a lot of panic with government employee officials who had a lot of savings in Chinese currency and other affluent people who were, because of the capital controls increasing, who wanted to get out. And I've heard from other sources, whether that's Emma Mullman, who's in the hedge fund community and has a lot of China contacts, that other people in the Chinese military do not have faith in Xi and also want their savings out too, that no one trusts the rally that the Chinese currency, the RMB or Yuan, has had against the dollar lately. If you look at a chart of the Chinese currency lately, the 6-month chart, it's come down. The currency has strengthened a lot against the dollar. It was above 7.1 and it looked like it was headed to 7.2. And if you look at the chart, really, let me pull up the date here. So towards the end of September, the currency on the exchange rate, well, actually in August, at the beginning of September, the currency got to 7.179 yuan against the dollar, and it just got absolutely hammered back down. And it looks like clear manipulation to me on the chart. It got down to 7.0673 yuan against the dollar, and then it rallied again, and then it just got it got as high as 7.1484 on September 30th yuan against the dollar, and then it got hammered within a couple days after that. On October 8th, it got up to 7.14 yuan against the dollar, and then it's back down again closer to almost 7 yuan against the dollar. But from what I'm hearing with my sources in mainland China, and some of these sources have lived in mainland China for over 10 years, that a lot of people do not trust this currency rally in the yuan against the dollar, that they are looking for opportunities to get their money out, and that foreign real estate, gold, other things are looking even more attractive. The real GDP of China was actually calculated by a Chinese economics professor in the mainland. There was a Zero Hedge article on this in December of 2018, and he said that the real GDP, he was running the numbers, and he did a presentation. I believe the video got 1 million views either on Chinese social media or on YouTube before the video was taken down. And Zero Hedge stopped covering this, but I believe the guy, according to my top source in China, he ended up shortly after the video went viral of his 1.67% GDP calculation and how the Chinese economy was contracting even more violently. Plus, China is dealing with stagflation, higher food prices, a lot of their enormous credit bubble, a lot of other problems that within a very short amount of time, this mainland Chinese economics professor ended up in a re-education camp. I hope he's not dead. He is a very brave guy. But there is no free speech in China. And in fact, in China, if you're not familiar with China, there is a malicious rumors charge. So he was risking, by putting that living in mainland China, being a Chinese citizen, not a foreigner. The foreigner, he probably would have just gotten deported unless you're Canadian now or American at this point. It looks like China's retaliating very strongly against some Canadians, at least a few of them so far. But I believe he was not charged with a malicious rumor, and I believe he just went to a re-education camp from what I've heard. I have not heard if he's resurfaced or not. So I hope to God that the guy is safe. But no free speech in China. So he was risking a lot by speaking out like that. So we got a warning from Li Keqiang that China's GDP was not going to be at 6%. It was going to be almost impossible for them to maintain that. Another interesting thing, and this is behind the paywall on Real Vision TV from a couple weeks ago, even they may have released this for free because they've been releasing a lot of the pay content that comes out a lot faster for free now. Like they released the Kyle Bass and General Robert Spalding interview that was behind a paywall last week, and that came out this week. So I'm surprised they released it for free so soon. Normally it takes them 8 months or 12 months to release that stuff if it's a really big interview. But if you take a look for free for the Leland, Leland Miller interview, and his, I don't know if they kept the same title, but behind the paywall, it's Ominous Clouds Forming in Chinese Data. So he was talking, if you're not familiar with who he is the CEO of the China Beige Book, and he lives in mainland China, so he's not a foreigner just looking at bad data, making guesses. He's boots on the ground. He hires Chinese people in mainland China to track data for him, and he doesn't trust a lot of the official government statistics. And he was talking about how the Chinese economy is contracting, and also in the interview behind the paywall, we'll see if they release it for free or not. I'll check after this video's over. I'll see. If it's for free, I'll put a link to the video at the end of the show after the show's over. And he was talking about how the Chinese government, according to his data and interviewing his contacts in the Chinese economy, was already subsidizing and bailing out a lot of Chinese businesses. So he said there was a lot of uneconomic, unprofitable Chinese businesses that were in trouble, that the Chinese state-owned enterprise banks and the Chinese governments were not calling in loans or giving them bailouts and subsidizing. He said the amount of those bad businesses, zombie businesses, that were uneconomic, unprofitable had exploded. So he said that China's covering up how bad the economy is getting. And normally I would say his coverage is more balanced. He's not a China bear. I would not call him a China bear. So definitely, if you're a World Vision TV subscriber and you missed that interview, take a look there. So now on to the Chinese gold price. So I was looking at a chart of the gold price in Chinese yuan, and it's gotten hammered pretty hard since the beginning of September. So it looked like it was going up a lot higher since the beginning of September, and it's gotten hammered pretty down quite a bit, and it's had some small rallies and gotten hammered down more. And that seems to have coincided with cryptocurrencies also getting hammered. So my thesis is that China is involved in some sort of manipulation with the paper gold prices, paper silver prices in China, at least, maybe more than that, and also with cryptocurrency prices. And there's a lot more evidence that's coming out that the Chinese banks and the Chinese government, with the new relationships with the Shanghai Gold Exchange and the LBMA, London Bullion Metals Association, that there's becoming interlinks. For those of you who are not familiar with some of the incestuous relationships, it's already been a number of years now where Chinese banks have had seats on the LBMA. So some of you may not be aware of that. So to say that China's going to definitely crash the dollar and that China's, going to thwart the manipulation, the paper price manipulators, the evidence that we're seeing with China joining in with the banks in London, joining in with the American bullion banks, making associations with the LBMA and American bullion banks and stuff like that. It's all incestuous. They're all connected. Which is why at this point, I don't trust any government. I've said this. I criticize governments all the time. I criticize the US government all the time. I criticize the Chinese government. The European Union's a disaster. Japan has way too much debt. And a lot of the Bitcoin mining is done in China, although in the last couple of years, because of regulations and also energy costs, that a lot of these Chinese Bitcoin miners were leaving. Okay, so I wanted to read the panic behind the scenes. China's capital outflows are soaring. This is a Zero Hedge article from a couple days ago. So for months, pundits have been looking at China's official data, be it on the People's Bank of China's, which is their central bank's reserve data, or SAFE, their monthly flow report. I believe SAFE is one of their sovereign wealth funds flow report, for indication that capital flight is picking up again, as it did in 2015 in the aftermath of first yuan devaluation. And so far, the data has refused to validate predictions that Chinese depositors are quietly pulling their money from China's financial systems. That's the official data. Does that mean that Beijing has been successful in implementing draconian controls on outbound foreign investment and other capital movements to lock the front door through which money used to leave China? That's one possibility. However, in the Wall Street Journal article that came out on October 14th, instead of using the front door, Chinese capital is increasingly, quote, walking through the back door following the recent sharp devaluation in the yuan in August, which has slumped 6% against the dollar since late April and 10% since mid-2018. Of course, should the back door open any wider, Beijing will find itself again forced to sell down big parts of its currency reserves to avoid a panic. Worries about cracks in currency fortress China are another reason Beijing is likely to remain wary of aggressive monetary stimulus. The other reason is that people in China are very cognizant now of stagflation and higher food prices. So if China were to do more quantitative easing, more stimulus, more currency devaluation, and it happens too quickly, it could potentially create more social unrest, but it would increase velocity of money as more people in China would want to buy physical gold and silver, would want to buy food, would want to stock up on food, etc. So it's also why, continuing with the article, it's also why China, the country where economic data is anything but what is represented by the government, has no qualms about fabricating data to refute a worst-case scenario that would unleash a self-fulfilling prophecy, leading to more devaluation and more capital flight. And yet, despite Beijing's best efforts at misdirection and outright data fabrication, there is a relatively simple way to keep track of what is really happening with China's fund flows behind the scenes. As the Wall Street Journal notes, the relevant figure to track is China's, quote, errors and omissions, end quote, line in its balance of payments. The number represents the residual of the main balance of payments accounts, registering trade and investment flows. In other words, capital that has moved across China's borders without being documented. An equation, quote, plug. Whereas in most countries, this line item is relatively small. In China, since 2014, when Beijing decided to stop appreciating the yuan against the dollar, it has become persistently and mysteriously large and negative, with analysts at Rhodium Group and others long suspecting that this item represents undocumented capital flight. And while this shadow capital flight moderated in 2018, the trend recently became even more striking as, quote, errors and omissions hit a record first half high of $131 billion. That's a pretty big number. In 2019, the Wall Street Journal notes, citing Jean Ma of the Institute of International Finance, much larger than the first half average of $80 billion during the period of big capital outflows of 2015 and 2016. So if you're not familiar with 2015 and 2016, and this is for the guy that was arguing with me in the comment section of the video I released late last night about a U.S. and China trade war, U.S. and China trade negotiations update, that back then in 2015, China officially had $4 trillion in reserves, and in only 12 months, China spent $1 trillion in reserves defending their currency. So they were not running current account deficits, twin deficits back then, but things were starting to get shaky before Trump won the 2016 presidential election. So China's economy was already in trouble. China had already started doing, according to a lot of different sources, these derivatives, these forward dollar swaps, because they'd already blown through $8 trillion officially in their reserves in only 12 months. They went down to $3 trillion. If you have friends who have a Bloomberg terminal, you can look up the exact official reserves, although I would say that Bloomberg tends to be more pro-China, so if the number is lower, they may not actually calculate that number out. Okay, back to the article. So 2015 and 16, China started to blow through their reserves, and then from what I've documented with Kyle Bass and seen what he's released publicly in other articles and other experts, that they started to go to massive amounts of derivatives to not blow through all their dollar reserves. So they went to these forward dollar swaps, and their amount of these derivatives, the forward dollar swaps, are at least $1 trillion. But there are other people that think it's way higher than $1 trillion. So on the surface, this suggests that true capital flight is now twice as large as what was observed after the 2015 devaluation, and indicated that while measures instituted a few years ago to limit capital flight have appeared effective, China remains vulnerable to rising outflows through unofficial channels. So this is what I've talked about for the dangers of an emerging market country with a currency peg, net capital outflows. Very dangerous. Normally, it accelerates a crisis with massive net capital outflows, and the country is running a currency peg. Furthermore, the country has yet to report its third quarter figures. Okay, now we got our third quarter figures. Remember, this article was on the 15th. So following the big yuan depreciation in early August, when it dipped below 7 against the US dollar for the first time in a decade. So what to make of this? Two things, and neither is good. First, as the Wall Street Journal notes, Beijing's decision to allow its currency to offset the pressure from the trade war has been one of China's key survival strategies so far, but, quote, with increasing signs that the ocean of capital sloshing around behind China's dike is finding new cracks and out of control domestic food price inflation, adding to the stakes, that strategy is looking riskier. The second one is that with capital already fleeing China, any future attempts to boost China's economy using monetary policy will be promptly punished, which also explains why the world is sinking into a recession. As a reminder, in a world where China has been the primary growth dynamo since the 2008 financial crisis, thanks to its tremendous credit impulse after the financial crisis, this massive credit creation mechanism has now shut down. I would say it is not shut down, it has slowed down. Because according to Kyle Bass, the amount of credit in the Chinese economy is now over $50 trillion. That has all been done in only a decade since the 2008 financial crisis. China has gone absolutely crazy with the amount of, first of all, base money creation. There's an enormous amount of base money supply sloshing around the Chinese economy. There is an enormous amount of credit sloshing around the Chinese economy, and also a lot of dollar-denominated debt sloshing around the Chinese economy. And the Chinese government and the People's Bank of China, which is China's central bank, cannot print away the dollar-denominated debt. That is more serious than their RMB debt. Okay, as Beijing runs the risk of an out-of-control capital flight should it push too hard to stimulate the local economy at the expense of another sharp devaluation in the yuan. In short, whereas the official data does not show it, reading between the lines suggests that the global economy may be on the verge of collapse. So like I said, even though China's currency has had a rally for the last couple weeks, a lot of people in mainland China, from what I'm hearing, do not trust this rally. They are looking for an opportunity to get out, to get into foreign real estate if they can, to get their savings out. And I think part of that strategy for China to try to stop this and to prevent people from using cryptocurrencies and others is to smash the price down. Also, the gold price in Chinese yuan is not doing as well as it was even at the beginning of September. Okay, so I'm going to take a look at Super Chat. Oh, thanks. I got a couple Super Chats. Thank you to Tomcat. Tomcat, I think there's evidence here in the charts, especially since September, that China did smash the gold price. They didn't want all their citizens dumping the currency too quickly, so I think they slowed down the rise in gold price in yuan. Leo, thank you for the Super Chat. I'm glad you like it. This is a good comment here from Crazy Ant. Quote, I'm just waiting until the real estate market in China crashes and all of that speculative investment goes down with it. This is what the Chinese government is trying to make sure. Have you heard that the Chinese government in different provinces has canceled any real estate sales where the prices, where a sale is way below market? They canceled the sale because they don't want anyone else to see that something sold for 20%, 30%, 40% off or more. So those sales are canceled to disguise prices, disguise the market. I've heard a number of stories of sales below market price where people wanted to dump, those being canceled. So I think you're right that China is well aware that if real estate prices fall, that could accelerate things worse, but they are playing games, playing tricks, manipulating that market, changing the rules. Look, they're canceling sales, real estate sales, because the sale was below market price. Do you think that could happen in the U.S.? No, I think the U.S. would probably subsidize or do a bailout or do a tax credit for the home builders or some other scheme to get the millennial generation who's in debt up to their eyeballs and can't even afford to pay for a car. Maybe some type of a no down payment mortgage or something in the future. I've heard one of my friends, Brian, has been theorizing that they will offer millennials out of college who are in debt up to their eyeballs here in the U.S. with student loan debt, can't afford a car payment, can barely pay rent, so they can't own a house, and they will get some type of no money down mortgage. Maybe it's subsidized or something, I don't know. Because when the baby boomers sell houses, who's going to buy? It's not going to be my generation, or the younger generation that's graduating college in the U.S. What is it going to be? Foreigners? There's a lot of foreigners with a lot of capital in the European Union, China, elsewhere who want to buy American real estate. On a relative basis, they'd rather own American real estate. But a lot of Americans, especially my age or younger, graduating college, they're not going to be able to afford American real estate. Tamar says Chinese have been getting their money out buying Seattle real estate. Yes, Seattle. Well, Seattle is after Vancouver was overvalued and saturated, and then after Vancouver passed the empty house tax, the, I believe, 10% empty house tax. So there was a lot of spillover from Vancouver into Seattle. So for those of you who want to argue with me about Chinese data, I hope you know the data. Because if you're going to tell me that China has $4 trillion in reserves, that's from 3 or 4 years ago. Okay? If you're going to argue with me on the data, I hope you know the data. Otherwise, it's going to be an ugly 5 minutes for you. And I'll warn you ahead of time that I speak with people a number of times per week who make 6 figures doing research, global macro data, looking at the Chinese economic data constantly, and I get updates from them. So for those of you who have listened to my podcast, you should not be surprised by this today. But the stock market is not taking this data well. The stock market is starting to get spooked. Like I said, this is global macro. So if China continues to post bad economic data, the stock market, Trump's going to have to keep manipulating with tweets out about progress with the trade war to fool the high-frequency trading algorithms. Did you see that news story that came out? There was a Vanity Fair story that someone may have traded on inside information with Trump tweets that someone made 1.5 and 1.8, potentially made 1.5 and 1.8 billion dollars in a very short amount of time buying S&P mini e-futures contracts. There's a Vanity Fair story on it that came out in the last week or so. So I'm not saying Trump did insider trading, but someone potentially in the Trump administration or a friend of someone in the Trump administration made some trades, knew that Trump was going to send out some certain tweets that were going to make the stock market go higher. Todd asked, do I believe what John Williams says about the U.S. faking the economic indicators? Is China doing this too? Okay, this is a great question, Todd. Thank you for the question. Yes, I believe John Williams that the U.S. is faking the economic indicators. I've talked about this many times. Okay, so yes, basically all the U.S. economic data is fake, and the GDP data is also bad, and the inflation data is understated. First of all, GDP is not a good calculation. However, from what I've heard from a bunch of different experts, and I've interviewed a lot of them in the archives of my Wall Street from Main Street channel over the years, hundreds of interviews, a lot of people think that China's data is even more fake than the US. I don't know if China's shorting commodity prices. I think that there is less demand for some of these commodities. Now, so far, Christopher Balding has been wrong that China would stop buying iron ore and copper because the imports into China are still going up. But I think a long-term strategy, I just don't see China having the dollar reserves to afford lots of imports of international metals. Now, China may be able to do side deals with like a Brazilian copper miner or a Brazilian iron ore miner, and then they wouldn't have to pay dollars for those metals. But if China has to buy metals, base metals on international metals markets with US dollars, they're not going to have all the dollars to do that. Especially because I don't see an end to this trade war anytime soon. And I outlined all the reasons why in the video I released last night. The Federal Reserve, James Bullard, was candid in a speech on Tuesday in London. He's the president of the St. Louis Federal Reserve, and he expects this trade negotiation / trade war / Cold War / economic war to go on for years. Well, Kyle Bass, in that interview on American Thought Leaders, Epoch Times American Thought Leaders, it's 50 minutes long on their YouTube channel for free, he said that if Trump listens to him and the other trade advisor, Bob Lighthizer, then there won't be a trade deal. But that doesn't mean that Trump will listen to Kyle Bass and will listen to Bob Lighthizer. Trump might want to do a deal on paper that he could sell in order to get re-election, increase the odds of re-election for himself in 2020. Dude, you're a troll. Oh my god, that troll's back. I gotta call you out, dude. You're saying China has $4 trillion in reserves. You're back again? China hasn't had $4 trillion in reserves since 2015 and 2016. I already told you this. You're too lazy to look it up. I'm not arguing with you again. Look, if you're not gonna do the research or know the numbers, and you're just gonna repeat anti-U.S. talking points, pro-China anti-U.S. talking points, and be a China apologist, it's not worth arguing with you. And then you're gonna start calling me names, of course. A hot war delayed. That's a good question. I think it's more likely we have cyber warfare. I think it's more likely we have economic war, like tariffs or retaliatory economic sanctions, where China maybe continues to cancel contracts for American companies, things like that. I mean, look at what China's doing, retaliating with Canada. I mean, China's gone over the top for the Huawei CFO arrest in Canada. China's doing a lot of stuff against Canada now. I wonder if Canada realized that them helping the U.S. would cause all these unintended consequences, ramifications. No, I just said it really quickly. China apologist. Now, that guy needed a timeout. He can keep telling me how great China's economy is, then how come I keep hearing from sources, a number of sources, inside mainland China that they don't trust this rally in their currency and they want to get their money out? Paul says, Jason, it just shows you that the pay trolls are being given the $4 trillion talking point to get the medicated masses to repeat it. I 100% agree. The official number, if you have a Bloomberg terminal, if you're a financial professional, or if you have a friend who's a financial professional and has a Bloomberg terminal, the official number was $3 trillion in reserves, but Kyle Bass and others think it's a lot less. Do the research. Don't keep repeating old data that's 3 or 4 years old. A lot has changed in China in the last 3 or 4 years. A lot of people inside the Chinese government and the Chinese military don't trust Xi as much. Okay, a lot has changed in the last 3 or 4 years. Over the last 10 years, a lot has changed in China, but especially in the last 3 or 4 years. They've misallocated trillions and trillions of dollars of wasteful spending. Oh, I would love a gold standard, but no one wants one. That is a great point. Mr. Freeze says, China reminds you of Japan in the 1980s. Did Japan take over the world? Did we all have to learn Japanese? No. And if you speak with Chinese government officials, they will repeatedly tell you, and I've heard this a lot, that the worst case scenario that China believes is that they end up like Japan. However, I hear from a lot of China expats who listen to this podcast now and send me emails, and they monitor Chinese social media for me occasionally. So thank you. Shout out to a number of you guys and gals out there. Much appreciated for the help. But a lot of these China expats now who lived in China or have family there or the family left, they are telling me more and more over the last year or two that they see China, the mistakes that China is making, and maybe this is because of Xi, and all the draconian totalitarian policies and the misallocations of capital and all the crazy things with the credit that's happening over there, and how China now needs 6.75 units of credit for 1 unit of GDP creation. That's how crazy things are, along with the credit bubble and their money creation. By the way, did you see that Chinese government official that he was caught with? Okay, so everyone knows now that he was caught with 13 tons of physical gold. It's over $500 million worth of physical gold. He had a secret vault. But what most people don't miss in the article is that he also had over 40 billion US dollars worth of printed US dollars. He couldn't move the gold. That was the problem. And the gold bullion is not allowed to leave the country. It's illegal. So what I said he should have done, he should have pimped this out, is he should have hired like an army of beautiful Chinese models, and he should have adorned them with gold jewelry, and he should have taken like dozens of sexy Chinese models on like a private jet from wherever he was in mainland China to like Hong Kong. And then with the gold jewelry, probably could have put them in a vault or liquidated them. There's literally like 50 live chat questions coming in. I can't answer anyone's question. I can't answer everyone's questions. Unbelievable. There's like 50 coming in every minute or two. Most of them I don't even see. IBJI asks, does the Chinese Communist Party really care about social unrest? Yes. Yes, but a lot of people, according to my top China source, a lot of people in mainland China don't complain at all. There are no protests in mainland China, very few. The protests I've seen are normally if like a construction company starts to discount condos. So if a construction company builds condos or high-rise apartments, and then all of a sudden they start to discount them to sell the rest of the units like 30%, 40%, 50%, then there's protests. Or if there's a peer-to-peer money scam where a company stole all the money, all the savings of someone, then there's protests. Or recently, I covered this in the last like 6 weeks, where in Guangdong province, the pensioners there, the retirees, were not getting their checks. And there's a lot of stories and a lot of evidence, whether it's from Michael Pettis, who has lived in mainland China for over a decade, and he's talked about how a lot of government employees and state-owned enterprises, government employees are not getting paid, and state-owned enterprises are not paying their bills on time. That's been covered in multiple areas with the New York Times. Jonathan, if you have $40 billion in printed Chinese yuan, I mean, you'd think that you would have like higher quality. Guangdong province. Kwasi says China has 8 trillion in reserves. Can you get social credit points now? That's a good one, man. That's a good one. Wow, a lot of trolls today. One guy's like, I can't follow anyone who doesn't give trading advice on their YouTube channel. First of all, I don't give any financial advice, just my opinion, stupid disclaimer. Second of all, if you want to hire me to do research, very, very expensive. My billables are over $75 an hour. And yes, people have paid. Todd asks, do I think China will follow the U.S. with repo madness? No. No, I think China's going to keep bailing out, subsidizing their factory owners, subsidizing unprofitable businesses, bailing out those loans in RMB. No, I don't think they're going to do any repo madness stuff. And what they're doing with the banks is China's asking their 4 largest banks, their state-owned enterprise banks, are asking them to bail out everything. It's nuts. The 4 largest Chinese banks are on the hook for bailing out provinces, bailing out smaller governments, bailing out medium and smaller banks. They're being asked, the 4 largest Chinese banks are being asked to do a lot. I share a lot of my research for free. Not everything's free, but it takes a lot of work to do some of this content. So that's why my Patreon is very important. That's why I'm so thankful I have over 170 now Patreon account contributors monthly and about a dozen monthly PayPal contributors. Because at any point, YouTube can decide, even if everyone hits the like button on the likes, even if I get hundreds of comments in the videos, YouTube can just decide that they're taking away 30% or more of my AdWords revenues, which, by the way, has been happening now for the last couple weeks, or they could just shut down the growth in my channel. So my channel was growing at 2,000 new subscribers per month for a long time without even a dime spent on marketing. It was all just unique content that you will not find anywhere else. And I cover a lot of topics, not just China, if you're new to my channel. And then recently, in the last like 5 or 6 weeks now, my channel hasn't even added 100 new subscribers, and I'm getting reports that longtime listeners to my channel are now being unsubscribed without even asking. This is a great question in the super chat from Veritas Arrow. Do I think normal people are starting to realize how much influence China has over U.S. companies, e.g. Blizzard banning players for being pro-Hong Kong? Yes, I think people are starting to wake up. Not a lot of people yet, but some. And the polling that's coming out is that more Americans over the last like 3 or 4 years. So when Trump was talking about potentially putting tariffs on China in 2015 before he'd officially announced his candidacy, and then when he announced his candidacy and he was talking about tariffs, and I was covering that on this channel, and a lot of people like, oh, he's only saying that, he doesn't mean it. The attitude towards China was not negative, and the polling that of Americans towards China has changed. So there's a big increase now in Americans who no longer are pro-China. And you could see that with the Democrats, with the DNC debates, with the Democrat debates. A lot of the Democrats are still talking about renegotiating trade deals. At least they're claiming with their words. We'll see with their actions if one of them actually gets elected instead of Trump, although I think that's unlikely. But we would have to see if their actions match their words, because they're saying, at least for the pro-union people, American workers, American labor, that they do want to, the one thing they seem to agree with President Trump on is being tougher on China. IBJI asked, why isn't organ harvesting big news? It's because it's intentionally, the American mainstream media is threatened. They're not allowed to cover it. They're threatened with lawsuits, advertising pulling. The American financial media receives a lot of money from the Chinese government per year. China Uncensored has covered this. So that's why it's not covered. It was mentioned on a fictional drama on CBS. The producers had it in an episode. I think it was like Good Mother or one of those. And the executives at CBS Entertainment, they found out and they pulled the episode. China found out ahead of time. China found out weeks ahead. I don't know how. Before the episode aired, and it was pulled. So there's a reason it's not talked about in the mainstream media. I'm in shock that it was mentioned in Seinfeld. So I think I covered pretty much everything that I wanted to cover in the show. I got one more super chat here. Let me see. From Annika. Oh, thank you. I cite a lot of sources, cover a lot of data. I check my information with multiple sources normally. If something's a theory of mine, I'll list it as a theory or a speculation. Okay, well, that's it for right now. I spent a lot of time working on that video yesterday, the short little 10-minute update. There's a lot of stuff in there about trade negotiations behind the scenes. So I honestly don't think if we do have a deal, it's going to be a deal in name only. It's not going to be real. Actually, David, if I was trading, I would have been short oil. I had research clients who were paying me, and then they fired me. They fired me in January of 2019. I was getting about $2,000 a month to do research for them, and I was writing research reports, and I was telling them, in my opinion, that oil was a big short in January 2019. And guess what? Oil crashed. The oil stocks crashed. They didn't listen to me. They fired me. I was saying in late December, January, that oil was in trouble. I was right, and I got fired anyway from that research job. That's just what happens. Rich people don't want to always listen. And I don't do short-term trading. I know how to do it. I just don't do it. All my investments are all long-term oriented because I spend time creating content, and you know what? I want to wake people up. If you want to be rude, you can go to another channel. I don't need you, bro. I'm going to have 200 Patreon account contributors in a couple months. Oh, and by the way, I gave people free stuff on Beyond Meat, and I told people about the lockup and what's happened with Beyond Meat. Didn't it crash? The insiders all sold shares. Once the lockup expired, they've been dumping shares. Tilray? Oh, my call on Tilray. My opinion on Tilray. Anyone remember that? I think Tilray's down more than 80% since I talked about it a year and a half ago. No, dude, you're gone. I don't need you here. I don't need that kind of stress. The Beyond Meat video was from earlier this year. I think April or May. It's in the archives. Go back and look. I was telling people, wait for the lockup. The stock's going to go up in the short term. Find out, go through the analysis in the reports. Find out when the lockup period expires. And the insiders, I was looking at the financials, that the financials of Beyond Meat were horrible. Wasn't making any money, horrible. And that as soon as the lockup period expired, the insiders were going to dump a lot of shares. And guess what? That's what they've been doing. So for the future, when a company IPOs and the stock is irrationally going up on revenue-only generation, find out, do the research. This is not financial advice, just my opinion, but you can ride the bubble up and then find out when you can hedge it too with options. Just my opinion. I've done this before in the past. And you can find when the lockup period expires. So this is legally the insiders of the company are not allowed to sell their shares until 6 months or so after the IPO. And then once that lockup hits, sometimes these stocks crash 70, 80, 90%. And that's what happened with Tilray. It was very predictable. Go back into the archives and look at Tilray. Instead of writing mean comments about me, actually check my track record. I should start interviewing hot Chinese women who know a lot about economics. I dated a hot Chinese woman who knew a lot about economics, and then I found out after a couple dates, she was from Beijing here, I found out that she had a boyfriend and a kid back home in Beijing and was lying to me. I found out after I Facebook requested her and I saw all her baby pictures and her boyfriend in them. She was a mess from what the more I learned about her, the more bad things I found out. She was really good looking, but oh my god, she was a disaster. And she had an economics degree. She also had I think she had a master's degree from Carnegie Mellon. And guess where she worked? Even though she hated finance, she had a job in the credit department at a bank. Credit derivatives, because she had a master's degree and a strong math knowledge. She worked at Capital One Bank in the credit derivatives trading department. No, I did not get honeypotted. I was not talking about China back then. This was 3 or 4 years ago. She had really bad bear goggles. I also saw her out at a bar after I dumped her. She was making out with like a 300-pound dude. She was a good-looking woman. I think she just got drunk and I don't know. I probably should not be saying this stuff. Okay, well, that's enough for today. That's enough oversharing for today. Everyone have a nice weekend.